Welcome in, everyone. I am the Crypto Bull God, and this is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, click the bell icon for all notifications to know when I go live each and every single weekday. And here we are on a Saturday evening, as I said. I think today's going to be a little bit of a treat for you because as I was preparing for today's live stream and kind of spending some time really thinking about what I wanted to talk about, I actually felt that based on the context of the conversation today and in 13 minutes here, kind of assessing the way the monthly candlestick is closing out on Bitcoin and the ever important 2-month candlestick, I think based on the context of that conversation, it will be helpful to first have a broader macro cyclical discussion, which will lay the foundation for this discussion for the August close. So with that being said, we're not going to get into too many specifics. I'm going to give you the level of detail that I think is important for you to understand. Because one of the things that I stress on this channel is if all you're doing is sort of going through the day-to-day, you can really get caught up in all the volatility. So one of the things I've been very thankful for is the time that I have spent this past year. I've learned so much, actually, just in the year 2024. Just learning about cyclical events, really trying to make sense of why things historically have behaved the way they do around the Bitcoin halving date. That, I was never a person who believed that the halving date dictated price action. I always felt that that was silly. I still do that people that think that. And lo and behold, there is something bigger going on that we're going to have a conversation about before we get into the closes here. And that is the business cycle, the liquidity cycle, everything that's going on with interest rates. I want everyone here to fundamentally understand what is factual, objective, and what's going to happen. Now that we know that in September, the Federal Reserve is going to begin decreasing interest rates. Again, it's not going to matter in the long term whether they decrease 0.25%, 25 basis points, 50 basis points. It's not going to matter. The point is, they're based on history, and we're going to take a look at this. Based on history, we can project out that a year from now, likely, the federal funds rate will decrease from 5.5% to roughly 2.5% to 2%. But what does that actually mean for asset prices? So let's have a conversation about this. I saw this chart recently, which really, and you've seen different variants of this, but I think this really depicts it well. This is indicating to you the correlation which exists between the M2 money supply and Bitcoin's price. Okay, and obviously, as we're going through here and we're talking about Bitcoin's price, you can use this as a proxy for the entire cryptocurrency market. Okay, so what is the M2 money supply? What is that? Well, the global M2 money supply are all the major banks, right? All the major countries. And it essentially represents how much liquidity can be accessed within the market, okay? And what we're seeing here is, as this green shaded region, which is the M2 growth year over year, you can see as it's increasing, you can see that positively correlates with an appreciation in Bitcoin's value. With an appreciation in Bitcoin's valuation, okay? Bitcoin's price is the black line, and there's a couple different lines you can kind of focus in on here. Let's just go to, I really like this chart. Let's just go to right here. So if you want to follow the blue line, that's fine. That's US specific. The green mesh in the background is the entire global supply. You can see that in generalities, because the U.S. is the most predominant and important country in the world outside of China, As that blue line is increasing, you're seeing the green mesh in the background increasing. You're also seeing the black line, which is essentially cryptocurrencies. You're seeing that increasing as well, right? So there is a positive correlation that exists between these two. You can't debate it. So if we go through to the current time, what you can see right now, a couple things. One, we've seen a stark decrease in M2 money supply, right? And we can see in times past, anytime there's been a dip in this area here, in this area here, you can see what has resulted in the price of Bitcoin. We've seen corrections, right? You can also see that in the shorter term here, in 2024, from February going all the way up to current times, you see how we're starting to see an uptick, okay? An uptick in the M2 money supply, whether you're talking about the United States or the global M2 money supply. Well, let's tie this now back to interest rates, okay? There might be another chart we look at here in a second. But if we tie this back to interest rates, interestingly enough, there is an inverse correlation which exists between the movement of the federal funds rate and the global M2 money supply. So when the Federal Reserve institutes a rate decrease, in this case in the month of September, let's say they do a 50 basis point decrease in the rates, they're not actually physically changing the rates, they're actually increasing the M2 money supply to decrease the rates. So just by the very mechanism of how the Federal Reserve operates, as interest rates begin to decrease, M2 money supply begins to increase. And we know, based on the prior chart, that as M2 money supply increases, cryptocurrencies, Bitcoin, everything, those prices increase. In fact, the other thing that you would, I don't have a good chart to depict this, but the other thing that you would note, and I wish I would have found this before the live stream, but I can at least talk through this. The other thing that you'll note is there's a couple things to pay attention to. First off, the magnitude of the rate decreases will indicate to some degree the magnitude of the increase in M2 money supply. Okay? The other thing to realize is that as the M2 money supply is increasing, what has the greatest potential for price appreciation is a higher risk on investment, right? So, meaning when you look at the NASDAQ and you look at the tech sector and you look at a lot of those AI plays, they should see pretty substantial bumps up as the M2 money supply is increasing, as the Federal Reserve is cutting rates. But what is more risk on than NASDAQ, than the stocks? Ladies and gentlemen, you're here for crypto. Yes, crypto. Now, I know that the time in which some of what has been going on in the market has taken longer to play out than many of us in the space predominantly thought at first. But the benefit to being a nerd like myself is you spend a lot of time just educating yourself. You spend a lot of time learning new things, right? And that's what has led me to adopt the belief that there is a global cyclical play here that's going to go well into 2025 that says, hey, based on how the Federal Reserve historically has operated, based on rolling over these maturing debt levels every roughly 4 years, what you're essentially doing is, again, resetting interest rates every several years because the levels of debt within this country and other countries has been unsustainable, right? As this cyclical nature plays out, we should be ringing the bells. As soon as the Federal Reserve begins cutting interest rates in September, it should be a huge sign to us. This is the beginning of the last stages of the bull market. Guys, we've been in a bull market, okay? I mean, it depends how far back you really want to go. You could argue we've been in a bull market since back here in 2019 from an Elliott wave principle basis. But taking it back to the end of 2022, really, at the very tail end of 2022, we've been in nothing but an uptrend in Bitcoin. We bottomed out at 15,000. We hit a high of 74,000. We have been in nothing but an uptrend within the market. Yes, your altcoins have underperformed, many of them, not all of them like Caspa, but many of them have underperformed, and we'll hit on that today as well. But the important thing to keep in mind is we've been in a massive uptrend. Nothing has changed about that. Nothing with this candlestick close on the 2-month is going to change that. And once the Federal Reserve begins to signal that decrease in interest rates, we literally just looked at a chart that signaled to us that, hey, when the Federal Reserve begins cutting interest rates, the M2 money supply is going to increase. As the M2 money supply is increasing, you can expect your assets to appreciate in value, okay? So keep that huge macro idea in mind. And the reason that this will help best inform us on the 2-month close is because what we're going to talk about on the 2-month close, we're going to talk about the relative weakness that has been displayed over the past several days and what that could mean going into the month of September. Keep in mind, I have shared with you guys that we essentially need to ride out August and September. I've been saying this for a while, right? You got the seasonality going on with September. I'm not expecting anything monumental in September. But it's that fourth quarter, right? It's that fourth quarter where we can really start to expect that you're going to begin seeing Bitcoin pick up in price and hit new all-time highs. Now, whether that occurs in the middle of the fourth quarter, the beginning of the fourth quarter, the end of the fourth quarter, that's not important. You shouldn't be focused on that. If you have a higher time frame view and you have a belief based on that educational knowledge, as an investor, you should care less if Bitcoin hits a new all-time high in October, November, or December. It should not matter to you. But let's also speak about current price action going on right now. I apologize. I thought I was over this cold, but it just does not seem to want to go away. Of course, I've indicated the stair steps that I want to see eventually come up here. Of course, we've re-entered this territory here. And it is unfortunate because in the shorter term, this is why it's unfortunate. I believe based on how August is closing, and it looks like we just got our close, let's take a look at the 2-month, and let's take a look at the monthly. I believe, okay, unless if something materially changes based on history, which we always have to be open to, guys. I'm not out here telling you, and you know this, I'm not out here telling you with certainty what's going to happen. However, what I am doing is I'm studying charts and data and taking objective views based on what I'm learning, right? So it's not a subjective view, it's an objective view. Very, very different. But what I am seeing right now in this chart, what it's leading me to believe, and recognizing also that September tends to be a volatile month. Seasonality perspective, it usually isn't the best performer. My fear for some people this month, you're going to see some downside volatility that's going to shake people out. There are people calling for this to be a triple top. There are still people calling for this to be a triple top and for everything to be over. Now keep in mind, if that is true, which you know that I don't believe that, if that's true, throw out every single thing that I said about M2 money supply and interest rates. Forget all that positive correlation that exists between M2 money supply and Bitcoin and the inverse relationship between the Fed funds rate and M2. Just forget that. For whatever reason, doesn't work out. And the other thing to keep in mind is I put out a video here with 5 to 6 indicators that tell us with conviction when the market is reaching a top or has reached a top, an impulsive top. The whole purpose behind putting those indicators together was recognizing there's no one indicator that's ever going to hit with 100% accuracy, so you got a handful. None of them have fired. So what you're telling me is we're going to enter a massive bear market, and this whole liquidity business cycle doesn't play out, and the fact that none of those topping indicators signaled, well, they just, this time around they just didn't. We hit our blow off top. We hit our blow off top at 75,000, and none of those indicators fired. I don't believe it for 1 second. It is very easy in this market to allow your emotions to dictate your view on things and guide your decisions, and sometimes unknowingly. I know that at times the most uncomfortable times that I have purchased assets in this market were at or near the bottom, and the emotional side to me, part of me felt like, man, I know this is a smart decision, but it seems so stupid because the emotion is just so much fear, right? So you can't allow those emotions to dictate your buy and sell strategy in this market. You have to allow the charts to speak for themselves and then formulate your views based on that. And right now what I'm seeing here, unfortunately, because this month, we were up here above 62.7 last week. You know that I had come out here and said, boy, it's looking good. Well, this isn't a bearish candlestick, okay, first off. But it's not as bullish as we could have hoped for. Would have loved to have seen a hammer candlestick. A hammer green here on the 2-month would have been a clear sign of a trend reversal. It would have pointed to very limited downside and a trend continuation to the upside. What we have here is essentially a doji candle. And the doji candle, what it represents, it doesn't matter if it's green or red, but the doji candle essentially represents indecision. So I believe, based on my macro view and the lower time frame telling me that there's some indecision and bearishness currently going on within price action, you're going to see some downside volatility. Now, whether your downside, and we can kind of talk about some price targets we can aim for, but whether your downside volatility is 53,000 or 51,000, whatever the downside volatility target is, it doesn't change anything from a macro perspective. I have a current belief based on the way this is playing out, we can expect downside volatility in September, and we're going to see a very swift recovery in the fourth quarter and new all-time highs, okay? That's the general frame of mind that I believe you should have going into the course of the next few weeks. And I will say this, while I never, ever, ever offer financial advice on this channel, I never will offer financial advice on this channel, and I'll never claim to be an expert. One thing I will tell you is that I have been in this market for a long time, and I have spent a lot of time studying the market and learning from my mistakes. It's something I routinely speak with you guys about, okay? I cannot tell you how convicted I feel that we are going to see massive upside going into 2025. Whether we top out in the first half, whether we top out in the second half, we'll allow the indicators I've put together to tell us when we're getting those impulsive tops. The bottom line is I feel unrelentingly bullish going into 2025. I feel like I've been here before. I've seen this sort of sentiment in the market right before we're about to turn. I'm imploring you to not allow September to weed you out. Please don't get caught with your pants down selling in September. You're going to be buying higher in the fourth quarter. I can't guarantee you that, but I feel 97% convicted on that, okay? Let's take a look. So on the 2-month, again, wasn't the most bullish candlestick. It's a doji. It's indecision. The MACD looks fine. We're still bullish on the MACD. The RSI is just below 70. We want to see that thing pop up above 70. It's at 65. Stochastic RSI looks fine. Let's take a look at the monthly. Yeah, again, nothing alarming here. The RSI is still at 61. Stochastic R. Now, notice the stochastic RSI, what I would point out here is, you know, yes, we are trending down, okay? Ideally on the monthly, you want to see the stochastic RSI turning up, right? But this isn't overly alarming because, I mean, you can see this dip here probably during the beer virus, yeah. The big thing is if the monthly were to get all the way down to this 20 level and flirt crossing it. We're nowhere near there. We're at 50, okay? So, again, what we're looking for, though, is to get back above the 70 to 80 level. But nothing overly alarming there. Now, a couple of views I did want to take a look at with you guys. I was kind of contemplating if I was going to do another live stream tomorrow, which I don't know that I am, so maybe we should just cover this now. I kind of suspect I won't. This live stream will probably be a little bit longer than normal, so hopefully you can stick with me. There's going to be quite a few things we look at. So let's have a conversation about the weekly because, again, more than likely I'm not going to be here tomorrow. So very important to assess a few things with this weekly close. First off, we just had this huge bullish engulfing candle, right? And now we have this volatility coming in with a really thick, we had a thick green candle, now we have a thick red candle coming in, okay? This is the market, right? Again, this sort of price action doesn't surprise me for somebody who's been here for a while. Guys, thumbs up if you love the content, by the way. I would appreciate it coming out here on a Saturday night. What you want to watch for in the formation of this candlestick is you want to ensure that this doesn't become a bearish engulfing candle. So at the very least, we do not want to close below 58,440. So you really want to see this thing basically close tomorrow at 58,500 or above. If you start flirting anything below 58,500, I mean, that is spelling to you just by basic TA definition, because you have a bearish engulfing candle, you're going to see more downside volatility, and it very much opens up the door to get back into this area here, okay? So, again, just to be aware of that. Now, other things that I would be looking at, I love how I ask for help with the engagement. You guys do realize as a content creator, the only way this content gets out to more people is if you do engage with me on the thumbs up. I hope you realize that. I love how no one calls to help out. Okay, so the MACD, you can see, we're still, moving in a clear downtrend here. I don't need to draw any lines. I don't need to, draw anything here. You can clearly see we're in a downtrend. We need this thing to flatten out, right? We need some weekly price action to come in here, flatten out, and begin to cross up. And look at the negative, look at the lower highs coming in on the RSI, right? This is going to be a huge thing I'm going to be watching for. Again, when the relative strength index gets above 70, we want it to get above 70. We're sitting at 49 right now. And the stochastic RSI, the other thing I'm really going to be watching for here, we just last week, okay, got a cross above 20 on the stochastic RSI, which typically signals bullish momentum ensuing in the weeks to come. And now it looks like we're flirting with wanting to cross back down, right? So let's see how tomorrow closes, but we don't want to see a cross down there. Now, something else I want to look at, this is on the weekly, and we looked at this the other day. So let's evaluate now. Let's take a moment to evaluate some price areas that we should watch for, which would be concerning for us, right? Even though my outlook is that September is going to see some chippy-choppy downside volatility. Here's another way to say it. As much as I think it's important that you pay attention to the market and you not take your eyes off of things, my macro high time frame cyclical view says you could pretty much fall asleep in the month of September, October, wake up like mid-October, beginning of November, you'll be good to go. Now, I don't think you should do that, but it's to illustrate the point that I just think there's going to be a whole lot of nonsense in these next several weeks. I think it's going to be a whole lot of chip chop, weeding people out. You're going to see disaster shit all over YouTube. I guarantee you. The next Great Depression is coming. All that shit's going to be all over the place. However, let's talk about some concerning price areas should we hit them. There's a couple areas. Let's see here. Guys, I might have to exercise a bathroom break. Dear Lord. I was drinking a lot before the live stream. My bladder's not liking that too much. So, you know what? On that note, give me 1 second. Sorry, just give me 1 second. All right. I think someone gave me a thumbs up while I was away. I don't know how to take that. So anyway, let's get back to some concerning price levels that we should watch out for. So one of the things that we have covered, this is the weekly view on the Gaussian. You don't want to fuck around and flirt with getting back in the Gaussian channel. So, long and short is once you flip red to green and you're above it, you want to maintain price action well above here, right? Now, obviously, one of the things that we've spoken to on the live stream is volatility and price wicks. So it would be nerve-wracking, and I wouldn't want to see wicks begin to enter this area. But what you want to watch for at the end of the day are candle body closes. Wicks, if you close a weekly candlestick and there's a wick going into the Gaussian channel, too close for comfort is how to interpret that. We want to maintain price levels at or above the top of that Gaussian channel. Now, when we take a look at the top of the Gaussian channel, recognize that tomorrow at 8 p.m. Eastern Standard Time, that price level will change. You can see we're in an uptrend, right? The Gaussian channel is increasing, so the top of this line will be different, tomorrow. But right now, the top of the channel sits at 51,200. Okay, where was it here? Let's see the rate of increase. So, where are we at? Why is the middle of the top of the band? That makes no sense. 4847. Okay, so right around 51,000. So, based on the current view, what I can say is we really don't want prices dipping below 51,000. Okay, let's take a look at another view that we've spent some time talking about. Now, this is a custom view. This is a view we've spent quite a bit of time talking about in the past. It is a historically significant view on Bitcoin. I see no one else talking about within the industry. That is the 3-day Bitcoin chart using the 125 simple moving average. And the main thing to keep in mind here is, historically, anytime we've spent significant time underneath that 125 simple moving average, obviously there's a lot of bearish price action going on, okay? A lot of bearish price action. Once we break above with the candle body and this moving average begins to curl up, okay? You see my head curling up, all right? Once we begin to curl up, you do not want to get a candle body close below that moving average because in times past, it has a 100% hit rate. Did you hear me? A 100% hit rate that when that happens, there's significant downside. So the line here, and again, the moving average, although the rate of acceleration has begun to decrease because of recent price action right in here, you can see the sharp incline here, and now we've started to sort of flatten out here. Regardless, the line today is at 51,000. So, okay, interesting how there's price. Isn't it interesting when you identify critical charts with some historical significance, how there tend to be areas of price confluence that line up between the charts. We have found that many, many times in the past. So I would say one of the main takeaways that you should take from today's video, we don't want prices to go below $51,000. Once prices start to dip below $51,000, we really have to give a suspectful eye on the market and then pay particular attention to, in this case, a 3-day candlestick close and a weekly close on the Gaussian view to ensure that, okay, even if we go below here, was it a wick or was it a candle body close? So $51,000 is a predominant view. I want to also point your attention, Todd, by the way, man, thank you so much. Appreciate the support. Super chats are never expected, but always appreciated, my friend. I really, really appreciate it. You show up every single day, man. This is Bitcoin dominance. This is something that we spend a lot of time looking at. Now, what I guess I haven't really, I've articulated this in so many different ways, and you can see we've had a lot of fun drawing things together on this chart. But one of the predominant things I would point out to you, and I'm going to say the same thing I've said before, but stated differently. Have you ever noticed on the Bitcoin dominance chart that every single time we've bottomed out, that has signaled that the bottoming out of Bitcoin dominance has signaled a top in the market, bottoming out, a top in the market? Well, right now we're increasing in value. And obviously what preceded that was a massive fall, right? And again, just using basic TA, this is a rising wedge. And a rising wedge is bearish, and it has a high probability of breaking to the downside. Now, this should intuitively make sense, because what does it actually mean if Bitcoin dominance were to come down to here, or down here, or even lower? What does that actually mean? Well, what it means is Bitcoin is comprising less of the overall market. Your altcoins are comprising a larger overall picture of the market. Remember, I have shared with you guys, I gave an analogy this past week of going to an amusement park. And, I haven't been to one in a long time. I would love to do a roller coaster at some point. I forget who I was talking about that with recently, but I would love to go on a roller coaster. But unfortunately, I don't have kids, so I don't have an excuse to go on roller coasters. But when you go to an amusement park like Six Flags, or shout out to Hershey Park or Dorney Park in Pennsylvania, it's very boring when you're waiting in line, right? And then you have that quick euphoric feel when you're in the front of, what the hell is the name of that ride? Wild Bear? I forget. At Hershey Park. The one where your feet dangle. You're sitting in the front, you go on that thing, and it takes you all the way up to the top, and you're looking down, you're like, fuck my life, and then you just start going. It's just so much fun. But it lasts very quickly, right? That is what the run in altcoins is like. We wait this tremendous amount of time, right? All the meanwhile, if you're not objectively evaluating the data and asking yourself if anything has changed, sure, it's taking longer than I've communicated, I first thought, but has anything changed in the chart? No. We're in this massive rising wedge. Eventually, we're going to spill over. That's what the chart is telling us, right? So we're going to see a big altcoin season. Is just a matter of when. And I've signaled to you, I really don't see altcoins running hard until Bitcoin's up at that $85,000 to $92,000 range. I'm going to stick by that call. What else can we see? Let me see who I actually have in the comments here. I'm not even going to answer the 6553 question. Clearly that question implies that everything that I just shared on what you should be focusing on went right over your head. If that's your question to me, it went right over your head. Raghorn, I'm with you on that frame of mind. Long-term bullish on CAS and BTC, absolutely. Okay. Would you take advantage of tax loss harvesting if you're BT? No. Below your buy? Would you take advantage of tax loss harvesting if you're BTC? falls below your buy price. If we're not going to 4,000 to 5,000, I don't understand the context of your question, Raghorn. If there's any part of you that thinks we're going to 4,000 to 5,000, I don't know what to tell you. I hope that was a misprint. You typed that out wrong. Now, one of the other things that I did want to focus on here, that I have to say is not playing out the way that, at least I was anticipating, is the strength in the Ethereum chart. Now, unless if the cycle plays out different, we need Ethereum to do well. There are so many ERC20 tokens, and there's so much confidence that comes into the market when you have a strongly performing Ethereum cryptocurrency. This was the major range that I had spoken about not breaking below. And right now, we can say with conviction that we have broken below that range because we have a monthly close, okay? We got a monthly close, which is good enough for me. We've broken below this range. So now what we're beginning to flirt with, and you can see the other thing I would point out here, this massive uptrend that we have held since 2016 has broken, okay? So it's not the end of Ethereum, and it's not to say Ethereum isn't going to set a new all-time high, because it will. I think I have to take a look at my targets, but 8,000 is my minimum target on Ethereum. Anyway, what this is saying is that the relative strength that Ethereum has been showing is dwindling. And there could be all sorts of reasons for that. I've read some things on X, and I'm not going to say I disagree or agree, or I'm just going to offer. There could be a higher level of interest flowing into other Layer 1 projects. You look at Solana, and obviously you look at Caspa. So there could be all sorts of different reasons, but this trend, this is broken. And so the question we have to ask ourselves is, will we bottom within this price confluence, or could we come all the way down here? Now, it's still an uptrend. Keep in mind, a lot of the alts, guys, that you're holding, I hope no one here is holding Casper. A lot of the alts that you're holding have just been relentlessly bleeding against Bitcoin. Keep in mind, we're still forming higher lows here, right? So you still got higher lows going on. It's just the trend is getting weaker and weaker and weaker. It's also putting into significant doubt. Well, I shouldn't say that. The weakness in this chart for the first time is beginning to make me seriously question whether or not Ethereum's going to have that moment where it temporarily flips Bitcoin. The weakness on this chart, I wanted to see a break at some point, or at least, coming up here and just kind of riding the top here. That would leave me feeling more convicted, but man, we've been bleeding for a while now. So, and again, keep in mind, this is a monthly view. So let's take a look at this. Since here, okay, we're now in officially 1,000 days, okay? 33 months, 1,000 days. That's a long time. What else? Solana BTC holding up nicely. Trying to think if there's anything else I really wanted to cover. I really wanted to, on the monthly and 2-month time frames, I really wanted to focus on Bitcoin and what I was seeing in the chart. And I also, because it was very important to me, and if you didn't see the beginning of the live stream, it's very important that you go back and listen to it, because in my opinion, it's the most important part of the entire video. I think knowing that this month did not come in as bullish as I wanted to see, it was very important for me to come out here and indicate to you what my broader macro view is, and nothing has changed about that. Just because we're seeing some noise today, and I've been saying this for weeks, just because we're seeing noise, the noise shouldn't change our view. Unless if something fundamentally changes on a macro view, and I've shared some price points on 2 different charts that would leave me feeling concerned. Unless if something concerning starts to develop on the chart, I'm not I'm not concerned one bit. So that is where I stand at the moment. So we'll have to see how tomorrow the weekly close comes out. But that's pretty much all I had for you today. All right, let me see this restated question because your original question didn't make sense, Raghorn. I mean, I bought heavy at 56 to 58. If BTC drops to, say, 54 or lower... Well, I'll tell you my answer to this. So you're saying sell it and then buy it back immediately for tax loss harvesting purposes. I would say yes, I would do it if it was a position that you know you will be holding for less than a year, and you will be paying ordinary income tax rates on. If you're holding if this is a longer term investment and you're holding this a year or more and you're only paying 20% on the gain, I wouldn't fuck around with it. Okay, I wouldn't fuck around with it. But if this is if you have a trade position and you're trying to, because I've done tax loss harvesting for sure. If it's in a trade position, yes, I think it's smart. If it's a investment position of a year or more, no, I don't think it's a smart thing. So that's how I would answer that. And again, not financial advice. That's just my opinion. Anything else? Anything interesting going on X? Ethereum's monthly is cloudy with a chance of capitulation. Tony. Ugh. I'll tell you guys, I've seen this so many times before where another fundamental concept that we've spoken about on this channel is a deviation, where you have what's called a range deviation that fakes you out, right? What do I mean by range deviation? Here's what I mean. This is one of the greatest depictions of range deviation. This is your range. It doesn't look like a lot now, but if you were here back then, it was. This is your deviation. This is your deviation. If you were selling Bitcoin at $4,000, you looked like a complete fool a month later. And it's okay. I mean, look, I have, now down here I was buying aggressively, but, oh, Raghorn, you're welcome, man. Thank you for the super chat. Never expected, but always appreciated, my friend. Thank you. I lost my train of thought. What I was going to say is I believe one of the greatest opportunities for you to learn is to make a mistake. When you make a mistake and you choose to learn from it and approach it differently moving forward, your vision and how you look at things has completely now changed. It benefits you. Your success rate increases. So as much as I don't spend, and I think I've shared this with you, I don't spend a lot of time looking back on bad decisions I've made with investments. And had I not made a bad decision, what could have transpired, right? I really don't spend time thinking about that. What I do spend time thinking about is what caused the mistake and what can I do differently moving forward to succeed? Because for me, I have a high degree of confidence in my ability. I mean, you got to believe in yourself, right, to be successful in anything. I have a high degree of confidence in myself if I remain true to my objective analyses of data, and I'm willing to acknowledge and learn from mistakes. So I think it's one of the best things that you can do. But again, I think we're at this point. This point right now feels it's hard to pinpoint it. I mean, I remember down here, it was different, but there were a lot of people calling for the end down here. And I just remember emotionally how that felt. And while it doesn't feel exactly the same right now, I'm getting some of those same vibes. Again, people thought zombies were going to eat our brains. It's not exactly the same, but it feels similar enough, okay? It certainly doesn't feel like this, okay? Or even here. It doesn't even feel like here. Typically a market, another thing actually I had thought of ahead of this live stream that I forgot to mention. Notice if we go back to, you can actually go back here too. Notice, and this is on a monthly view, notice back in 2014, when the trend was over, we had a pretty sharp decline in a relatively short period of time. I'm trying to offer you all sorts of different views so you don't get weeded out here. Okay? We had a 70% decline in a short period of time. Here, we had a 70% decline in a very short period of time. I'm not even going to name all the debacles back here. It brings back PTSD for many of you, including myself. But we all know everything that happened back here. Look, in a relatively short period of time, we saw more than a 50% decrease in price. What has price been doing right now? Outside of this wick, okay, outside of this price wick, price has, if you really, we haven't had that sharp decline is what I'm trying to say. This has really been consolidation. Outside of this wick, if you were to evaluate this a little bit differently than I have drawn here, so the way the black horizontal lines are indicated here, it kind of gives you the range of where we've been. Okay, I don't know what this is. How do I? Sure. That gives you the range. But if we go like this, okay, and we go like this, all of a sudden you have a much tighter range. So what I'm trying to do is I'm trying to, and you can actually, just to better illustrate this so you can understand the way I'm viewing this. If we remove the wicks, what do we now have? All we have are candle bodies. And you can see that price has ranged between $72,000 and $59,000. That's a pretty close range. That's less than 20%. All right, again, removing the volatility, removing the price wicks. We have literally been doing this. We didn't come down here and then kind of gravitate in here. No. That would have been like times past that we just looked at. We've been in a very tight range, accounting for volatility. A very tight range. Just don't lose that perspective. Again, I will be, and I owe it to you, I owe it to myself. I mean, I'm as transparent as they come. What I'm thinking is what I share on this live stream. I will be one of the first people who comes out here and says something is going on I was not anticipating. We need to have an honest conversation. That's not what's going on right now. That's not what's going on right now. So just don't lose the high time frame macro perspective. If you weren't here at the top of the live stream, we had a really good discussion on M2 money supply, federal funds rate, and how those things relate to one another and how they relate to the price of Bitcoin and other risk-on assets. So make sure that you check that out. We looked at there was a second graph I wanted to look at with you guys, actually. Do I want to look at this? I don't know. It says the same thing now. I think that pretty much did it. The M2 money supply really kind of showed it. There's a couple other charts here, but I don't really. You can see CBG doesn't stay up late typically. I'm an early bird. Well, lately it's been hard for me to get up. I don't know what the hell is wrong with me. I think just my illness, whatever I'm still getting over. Had a rough time getting up this morning. Yeah. Okay. I don't think there's anything else I wanted to share with you guys. We went through a lot of views today. Guys, I appreciate you showing up. It's Saturday night. I know there could be a lot more interesting things you could potentially be doing. Pretty shitty weather here, so not even an option for me to want to do anything. I don't anticipate being here for the weekly close. I don't know if I'll be here on Labor Day. Chances are I will, but we'll see. Either way, at the latest, I'll be back on Tuesday. Quite possibly on Monday. Guys, again, to the spoils go the victor, okay? To the victor go the spoils. To the victor go the spoils. We got to ride out September, guys, no matter how it plays out. Again, I'm expecting downside volatility. Could Bitcoin hit bottom at 55 this month? Now that we're in September, could it bottom at 52 or 53? I don't know. Could it come down to 48? I don't know. Let's allow the price to develop. But I've given you some clear areas to be concerned about, and I've also given you some macro views to keep in mind so that you're not losing perspective on just how bullish everything is setting up to be going into 2025. Okay, again, I honestly hope this cycle doesn't complete until the end of 25, to be honest with you, because the greater the space, the greater the amount of time, the greater likelihood there is for further price expansion. So whether we top in the first half or second half of 25, whatever. But that is the predominant view. All right, guys, thank you again. And until next time, let's all spread awareness and let's carry the education forward. Take care.